Good morning, everybody, and this is your S&P 500 day trade setups for today. So let's just start off with this level that we have here, which is fairly critical, and that is at 45.53, 54, call it 45.50. But if you come across the weekly, you'll see that was the previous weekly swing high, and since then we've come up, closed below it, back, tested it, and now we're back at this area. So that's the first weekly level we need to pay attention to. Weekly oscillators, we did get diversions. You can see the diversions here. While price was going higher, the oscillators were going lower. And yeah, it's basically starting to play out. Still no real reason to be panicking, expecting a massive sell-off and crash down to the bottom as some doom and gloomers are expecting. I think we do have the opportunity here for another push lower, and that should come in down here onto the 33 EMA, which is at 44.77. So this 4,500 area and round about there is going to be pretty critical at the moment. So if we just start swinging back to the shorter time frames, what we're paying attention to, first things first, I think you can all spot the head and shoulders here. Shoulder, head, shoulder. This is kind of the neckline. There's two actual necklines here. So the one is this swing low or that one there. So basically, if I just use this level here, we need to crack below this area here. There's a bit of a gap down there still as well. If we get through 45.35, I then expect us to tag this area here at 44.77. But then for me to even start looking at getting bearish, we need to reject this area quite significantly. That's at 45.35. Personally, I think this is not going to play out. I think it's going to turn out to be a range at the end of the day. So moving down to the 3 hour, nothing really we can add to it. Yesterday was a pretty monumental sell-off. Tech stocks were hammered. Bond yield is up. Everybody's worried about inflation and the interest rate hikes. So this is it's very similar to, I think it was 2017, well 2016, 2017, 2018, where we played this game every quarter basically, as the Feds sort of priced in 3 or 4 interest rate hikes for the year, and then gradually the market started moving around, and sort of you go up to 5, then you come down to 3, and then to 2 rate hikes, and so that was kind of the noise that was being traded at the time. Earnings have been pretty okay, except for the investment companies. Some of the investment companies lost money this last quarter trading, so it just goes to show that not everybody makes money. Retail traders make money, lose money, but so do the investment houses. Anyway, that's kind of my view there. Now, what I do want to do though is just move this back to here, because this is the previous week low, which we kind of rejected, and we're dropping below. If we come back to the hour, and that's the level we need to pay attention to. You can see late in the session yesterday, it was looking like we were looking for some support here at 45.82, at 45.60 again as our weekly area. Nothing really transpiring there. So, the trend is down at the moment. So what you're looking for is pullback onto structure before chasing this continual to the downside. But for me, that structure is up here, and that is roughly at 46.16 or 4600. Not entirely convinced about that. It's been quite a steady decline. Probably going to find the European session drop a little bit further, but I am of the opinion, as I always am, that we are looking for value for a move to the upside. Now you can see there is a gap down here, and that's on the 8 hour, and that is pretty much in this zone here, 44.77. So that is a magnet that is going to attract attention, and there is going to be a lot of buyers coming in at 4,500. So the big question is, do you want to get sucked into this trading to the downside, or do you rather want to wait and see? Because I think there's going to be a reasonable pullback, even if it does drop through here and we drop a decent amount of points. There's going to be a great opportunity to buy back into this and trade it to the upside with a massive massive opportunity. So it's those once in a year type opportunities that could be brewing here. So yeah, I think for me, I'm sit on hands. I'm not really interested in chasing the shorts at the moment, and I'm definitely not really interested in jumping in long just yet. So I am looking for the structure for a long, and there is a bit of a flag brewing here. Sorry, there is a flag brewing here. There it is there. So that's the first thing. If we start breaking that channel and start forming a rounding bottom, then I'd start looking at this. But at the moment, watch it on the 8 hour. You're looking for structure. Pay attention to this weekly area that we're at, because there's two parts to it. I'm going to just use this level here. This was the weekly high here. So this, when was this? In August, late August, last week of August. This was the weekly high. We fell off from there. Then we got back into it. We broke through it. We didn't really test it here. You can see we attempted to, but didn't really test it. Then we broke through it. Then we closed below it. So we haven't really, on the 8 hour, that is, tested this. So this 45.50 area for me is something I'd be really interested to see what transpires. And it's actually probably worth a scalp today off this area. We tag this on the 15-minute smallish position, a relatively large stop loss, and then you're probably looking at something like 177 point gain back to these tails here. And if you break the structure, then you're looking at a move all the way back up to there, which is a good 637 points, which is massive. So anyway, that's kind of my view. Sitting on hands at the moment. Let's wait and see what transpires. More earnings to come. Basically another 2 weeks of earnings. Tech stocks are getting hammered at the moment because of the bond yield and inflation fears. So just let the noise play out, and then when the dust settles, you should be able to see the structure we're looking for. Hope it helps, and we'll catch up with you tomorrow. Cheers for now.